Mortgage property price drops and bank call loan risks. What happens when property prices drop below mortgage value? That is to say, you own bank $4 million, but the property is now only valued at $3.5 million, representing $500,000 below the mortgage value. Property prices dropping below your mortgage value, what does it mean for you? Today, we'll break down the risks of banks calling loans, and what you can do to protect yourself. What is a call loan? The definition is: when property prices fall significantly below the outstanding mortgage value, the bank may demand borrowers pay the shortfall in cash. This is called a call loan. You may say, I have been paying the mortgage installments punctually. I had no default. Why do banks still call loans? The reason that banks still call loans is basically as follows: to protect their financial exposure when the value of your property is no longer enough to cover your loan. Particularly common during economic downturns or significant property market corrections. Have you ever wondered what could happen if property prices suddenly drop? Today, we'll explain the risks for borrowers when banks call loans and how it can impact you. Let's look at a real-life scenario to understand this better. Imagine you bought a property for 5 million Hong Kong dollars, and the bank lent you 3.5 million Hong Kong dollars as a mortgage. That's an 70% loan-to-value ratio. Now, if the property value drops to 3.5 million Hong Kong dollars, the bank reassesses your loan-to-value ratio. Here's how it works: the bank originally lent you 70% of the property's value, 3.5 million Hong Kong dollars. When the property's value drops to 3.5 million Hong Kong dollars, applying the same 70% loan-to-value ratio means the new loan cap is only 2.45 million Hong Kong dollars. But here's the issue: your outstanding loan is still 4 million Hong Kong dollars. This creates a shortfall of 1.55 million Hong Kong dollars. And that's the amount the bank might ask you to pay in cash to maintain the loan-to-value ratio. Now imagine being asked to come up with 1.55 million Hong Kong dollars in a short time frame. It's no wonder many borrowers find this situation terrifying. You may not be able to observe the bank's demand to pay up the $500,000 to meet the so-called loan-to-value ratio. In that case, you may have to know the consequences of non-payment. If you can't pay the shortfall, the bank might demand full repayment of the loan. Failure to repay can result in the bank repossessing and auctioning the property. So what is the legal and practical advice to the property owner? First, stay informed. Regularly monitor the market value of your property. Understand your mortgage terms, especially the loan-to-value ratio clause. Second, be financially prepared. Keep an emergency fund to cover potential shortfalls. Avoid over-leveraging when buying property. Third, communicate with the bank. If a call loan happens, negotiate repayment terms with the bank. In some cases, banks may offer options to restructure the loan. Our recommendation? Always seek professional legal advice if you face a call loan situation. The right strategy can make a big difference. After the discussion, here are the 3 most common questions and answers. Question number 1: can the bank call my loan without warning? The answer: usually, the bank will notify you, but the timeline may be tight. Always read your mortgage agreement carefully. Question number 2: what happens if the property is auctioned? The answer is: if the auction price doesn't cover the loan, you may still owe the bank the remaining amount. Question number 3: can I avoid a call loan? In answering this last question, the answer is: avoid high-risk investments during volatile markets, and maintain a manageable mortgage ratio. A drop in property prices doesn't have to mean financial disaster. Stay informed, be prepared, and consult a professional when needed. If you have questions, feel free to comment below or contact us for legal advice. Don't forget to like, subscribe, and share this video for more legal insights.